Right. With that, we will move on to our next segment, our final discussion for today. And today we will talk about a salient sector of our economy, and that's about banking sector. And for that, we got Nimesha Jayakody representing Frontier Research. A very good evening to you, Nimesha.
Good evening to you, Nisanga.
Right. So first, let's talk about how the banking sector has performed during 2018. It has its ups and downs throughout the year.
Yes, of course, 2018 was a year which was tough for most of the sectors. It's not only the banking sector. If you look at the economy, it was affected by, say, both global factors and, of course, the domestic factors that were going on, including the politics. So, in terms of the banking sector, if you look at it, so most of the other sectors, the earnings up to September 2019, there was a 10% drop overall. Okay. But if you look at banking sector specifically, relatively this has performed well. Okay. You can say that because there is a growth in profits. Right. It's not a massive growth in profits, but nevertheless, compared to the decline, you know,
any reasons? Is it because the lending rates were increasing, or any particular reason for this?
Yes, so there are various reasons. Both the interest income and the non-interest income actually did grow during the year. If you look at the lending rates from around 2015 up until April 2018, the central bank was actually on this monetary policy tightening stance, and increasing policy rates was one of the key factors or key tools that they were using. So inadvertently, this translates into higher lending rates for banks. When you increase the policy rates, at some point with a lag, the bank rates also tend to increase. So with this increase, one area of the bank, say the lending growth.
How about the NPA?
So shall I address the lending growth first, actually? So lending growth did increase, decline.
Right.
I wouldn't say it was like a significant decrease from the previous year, but nevertheless, the growth in lending was curtailed with the increasing interest rates, and of course, there'll be other factors affecting this. So then the next factor, as you mentioned, the NPLs. So this higher lending rates translates into a situation where the
customers find it difficult to finance because it goes beyond their budget.
That's true. So when the lending rates increase, so they are going to find repayment, the installments, all of that is going to be very difficult for them. So it's a bit of a, you know, chicken and egg problem. You increase the lending rates to reduce the level of loan growth, but then this
existing portfolio gets affected.
So there was an increase in NPLs. Actually, there was 1% increase up to August 2018 if you compare with the 8 months of 2017.
So hasn't this affected the profitability of the sector?
So the increase in impairments, so to say, you know, the NPLs, the increase in impairments, all of that has been sort of curtailed. Rather, you know, the increase in the revenue stream, the interest income. With that, the banks have managed to cover it up. And, you know, the profit growth is not massive, of course. There's a small growth in profit, so they have, you know, just gone beyond that to record a profit.
All right. So with that, there were many tax introductions which came into the banking sector. What was the impact here, and how did the market react?
So in terms of the taxes, I think the key tax policy or the key tax introduction that there was a lot of noise about was this debt repayment levy introduced at the 2017 November budget. So initially, what the definition of it was a 2 rupee tax per 10,000 rupee transaction with the customer. So there was a lot of technical difficulties in, you know, identifying, is it a cash transaction, is it an overall, you know, transaction with all of that. So with all of that, by the latter part of the year, a decision was made to make it more similar to like a value-added tax, the VAT.
Okay.
So ultimately, what happened was the debt repayment levy was implemented as a 7% value-added tax, similar to that. So what it will come as is with the last quarter. It was implemented, I think, in October it is introduced. So with the last quarter's results, that would come out how the impact of that would be. So up until September, we don't really see that impact from the debt repayment levy. Where we will see it is with the full financial results that will come probably early next month or so.
Right.
There was also, if you remember, the withholding tax on the deposits that there was a lot of noise on it as well. There was a lot of
and the minor savings account was a huge concern.
Yes, so that indirectly also may affect the deposit levels of the bank. In fact, the deposit levels did slow down. So this may have been one factor affecting it. Of course, there may be other things. Do we have the discretionary income to translate into savings? So all of that together would have affected the deposit growth as well.
But when the lending rates were increasing, the deposit rates were also increasing.
That's
up
true.
To a particular level. So
Yes.
that has not helped the banks.
That may have curtailed some of the other factors, reducing the level of deposits. So both of these together has sort of, maybe have negated each other a little bit, but the overall result was a slight drop in deposit growth as well.
Right. So another major concern the banks had was the capital adequacy issue. So how did the banks face this situation? Certain banks still find it difficult to meet this requirement, and they're on a plan to get there. But how did the banks face this situation last year?
Yes, so this journey of bringing the capital up according to this Basel III regulations, this has been a 3-year journey so far. And this year, the 1st of January is the threshold, the date for them to achieve that final Basel III requirements. So in 2018 we saw a lot of banks having that debenture issues, the rights issues. So most of them were successful. I think there were some which were not, of course, but when you look at the results up to September 2018, we saw that there are certain banks which are yet to meet that 1st of January 2019 threshold. So we are yet to, of course, see the full year figures to understand whether they have reached by the December threshold, or if not, I think when the actual implementation or when the comparison will start is with the March 2019 results. If the banks have actually come up to this level. So in fact, there are more banks, about 4 or 5 banks who have already announced more rights issues, more debenture issues to come up in this year to continue to meet these capital requirements. So it's not a static figure, you meet it and then you don't forget it. So you need to, if you are to grow, if you are to increase your lendings, this has to continue to happen. The banks has to continue to increase their funding base to do this.
Right. So we are right now in 2019. So what are the challenges the banks will have this year?
So one thing is we already spoke about is the tax increases that are going to be reflected in this year's financial statements. The next is again the capital adequacy requirements. Will the banks be able to raise that capital in the market? Given that to a certain extent the investor confidence was low for most part of 2018, both due to global issues and domestic issues. But maybe we would see some of these resolving in 2019. So those two are there, and then the NPLs, which is I suppose the most critical factor. A lot of bankers, the regulators, all of them are talking about. In terms of NPLs, we need to look at these sectors that the banks are exposed to. So in terms of lending to private entities, highest would be in the construction sector. So the exposure is quite high there. So, and then if you take on the government construction projects, that will increase further exposure. So we need to sort of keep on monitoring what happens in the construction sector to understand how the NPLs will go for the banking sector. And another thing, as I mentioned earlier also, in terms of banks now, higher the interest rates, tighter the environmental conditions, the economic conditions, it would become more difficult for people to start, continue to pay their installments. So tighter this gets, the banks try to push them a bit further to make sure that they achieve their KPIs. But then again, how would this affect the NPLs, because the people will continue to default. So this goes on as a cycle. So the banking sector in general would also need to understand, okay, what are the best measures? What is how do you strike a balance? That will be very important.
Right. So also, can you touch on the BFI index? How have banks performed in the Colombo stock market last year?
Very interestingly, Ms. Sanga, if you look at the past 10 years or the past 5 years, the BFI sector that has the banking, finance and insurance, all three of them, that had outperformed the ASPI, the overall market, right throughout these 5 years. In 2018 specifically, we of course saw the ASPI going down by about 8%. And banking, the BFI sector, managed to curtail it and fell only by around 5%. So it has continuously sort of outperformed or reduced the losses it had faced.
Right. Can you also touch on how attractive this sector is for employment? As some time ago, it was the first option and the first choice was for school leavers was for them to join the banking sector. That was their dream. That was what they want to do once they leave school. But this has diluted up to a certain extent now. So how attractive is this sector for employment?
Yeah, so what you said was very true. If you ask someone who leaves school now what their priority would be, most of them, I think, would say they wish to go abroad. There are lots of attractive opportunities out there. Overall, so it affects most of the sectors, not only banking. So there is that out-migration of talent. Then again, we have a certain set of people who now say, we have a lot more options out there. We have these summer internship programs, we have these management training programs, given by, say, a set of really big companies. Again, we have the garment industry, we have, say, the travel industry. All of those may be getting together and conducting these programs, which are quite interesting for the youth who are just coming out of school. They feel that they will get a better exposure in terms of that. Then also there is a certain set of people who want to start their own businesses. So the startup culture is very high. So it may not be the first trend. That's of course a good trend. So it may not be the first choice for a school leaver now directly get into banking. It may be later on in the future as someone who has been in the industry. They may want to continue to get some experience and then get into the banking industry, which is a service that provides services to the other industries. So they may feel, okay, I would prefer to gather the knowledge, get on-job experience in other industries and then go and use it as a banker to help these industries.
All right. With that, we got to wind up for today. Thank you very much, Nimesha, for being with us today and sharing your thoughts.
Thank you, Nisanga. It was a pleasure.
Right.